Hey everybody, what's going on? It's James here with Crypto Common Sense. Got a market update video for you. It's just before 5 a.m. Central Time on November the 7th. Before I jump into today's content, please do me a huge favor. Go ahead and hit the thumbs up button on this video and don't forget to subscribe to the channel. So first off, guys, I apologize. I shot you a video yesterday at about 3 o'clock in the morning. I uploaded it to YouTube and then I realized today that I never published it. So, no need to publish it now. Doesn't matter what I had to say, whether it came true or not. I'm not going to publish a day old video, so I'll just do a new one. So here's the deal with Bitcoin right now. Bitcoin is having a rough morning if you're a bull. Is having a beautiful morning if you're a bear. But got to be very, very careful how we play this thing because Bitcoin likes its fake outs. Bitcoin likes to make you think it's going one way and then turn around and do the exact opposite. So let's dig into Bitcoin. Let's take a look at what it's doing. And we'll kind of go from there. So first chart that I want to look at, not going to look at a daily chart or a 3-day chart first. For a change, we're going to look at the smaller time frames. We're going to look at an hourly chart. So right here, what we have, and guys, I can't stress the importance of trend lines. If you don't learn anything else about trading, just learning some really simple stuff like Fibonacci levels and trend lines will go a long way in helping you to at least have somewhat of a handle on what the market's trying to do. So if we look at this pump up to 10.5, this whole scammy pump that happened a couple of weeks ago, we had RSI pop all the way up here to 95 in the hourly, which is just ridiculously overbought. Hopefully nobody watching this was buying when RSI was up at that level. Even if it was a bull run, and even if this had decided it was going to continue up to 11 or 12 grand, it's very likely there would have been some type of pullback where you could have got in. So anyway, we obviously couldn't draw a trend line starting way back here, but once we had these two peaks here back on November 2nd, then we could draw this trend line. And that's when I drew this for my private group, and we've been watching this thing pretty much ever since. Now, it's not like we're watching it like, okay, we're going to take a trade every time we touch it. It's more of just a general guideline of, okay, what's going on right now. So, for example, it bumped above, well, first it touched it right here, and it looked like it was a good place to go short, but then it just kept heading up. So it almost looked like the trend line was going to be null and void. Popped up here, didn't go short up here. One of the reasons I didn't go short up here was specifically because we were above this trend line, and I didn't like that action. Right? I didn't know what was going on there. It almost looked like it might go ahead and try to double top up there at 10.5. But once we fell back underneath it, it became a really, I don't want to say a line in the sand. It's not quite that strong, but it became very relevant. Okay, you can see we touched it here, and when we touched it right around 9,400, boom, we immediately dumped down to around 92.60, 92.70. Right, nice little day trade we got off there. Up here, touched it again. At the same time, we were bashing in the resistance. If you're wondering what that line is, that's actually the line of resistance right here around like 94.33, right? That's basically, depends on which chart you look at, but that's the line of resistance that I've been personally playing, 94.33, all right? So when you get a touch of resistance and you're also getting a touch of your trend line, again, oftentimes, good place to go short. So that would have been right around 94.30. And down it went, right? Had a little tweezer bottoms, so again, good place to close a short. If you didn't close it here and you're still in it, over here you've got a triple bottom, bam, bam, bam. Probably time to get out of that short position, and up it went, okay? Again, it popped above the line, so not interested in a short up there. Actually, I take that back. I did short it right there, now that I'm looking at that, and I got stopped out. When it pumped above that blue line, it stopped me out, which was a real bummer, because obviously you can see if I stayed in that short, instead of taking I think I took a 0.3% loss. Probably got a little too conservative with my stop loss. Probably should have put that a little higher. But, live and learn. Got stopped out, and then, of course, now we're way down here. So that's a bummer. But yeah, essentially, we've just been playing against this line. And then last night, I took the day off again yesterday. I took a couple days off this week. Just been feeling a little bit burnt out. This range has been boring to trade. It's just not, not the easiest thing to trade in the world. It's a lot easier to trade it's a lot easier to trade a trending market than a ranging market. So rather than try to force things, I've just been taking some time to relax, which is really the first time I've done that in the last 4 or 5 months. So missed these, right? Would have been a good place to go short right here around 93.44. Pumped up. You can see we had this parallel channel, which we could draw. Once we had this peak, we could draw this, and boom, touched it, right? So then you'd have a touch of your resistance here plus a touch of your resistance here would have been a great place to go short. And of course, since then it's dropped down here. So if we're taking a look at this, here's what I'm looking at. There's a lot of people that are probably trying to pop open late shorts right now. Bitcoin likes to punish late shorters, guys. It just does, right? I'm talking, obviously I'm personifying Bitcoin, but just the market in general, it tends to punish late shorters. So what I'm personally looking for, if I'm going to open a swing short, now day trading is different, but if I'm going to open a swing short, what I'd really like to see, okay, is I'd like to see this thing bounce, preferably come back up and test this line of resistance, and if I'm lucky enough, also test the top of this channel at the same time, right? And that would be two separate reasons for me to enter that trade. And then hopefully my 5-minute RSI would also look like it was, over bought, maybe even put in some bearish divergences. And if I can get all those things to line up, then I'll probably open up about a 5 Bitcoin short. I'm not going to go super crazy on it, but if I can get a 5 Bitcoin short open up around that level, and then it does what I think it's going to do, I can make back the money I lost on that crazy pump a few weeks ago, right? But I can't FOMO in. I can't just say, okay, well, I think it's going down, I'm going to go ahead and open that up, because you just can't do that. Imagine me opening up a 5 Bitcoin short at 90, let's just call it $9,200, and then it pumps up to $9,400, right? Then you're stuck in that situation. Okay, well, you're down about $1,000. Do you keep holding it and hope this line of resistance holds, or do you go ahead and close it? Where do you put your stop loss? Do you put it here? Do you put it here? Right? Really tough stuff. But on the flip side, if I can get this thing, if I can be patient and this thing does pump up to this level, right, then I can do something like this, where I can put my stop loss up above this wick over here around 9,600. That's going to be about a 3.4% stop loss, which would be somewhere around $1,500, $1,600 if I was wrong, which would suck. But if I'm right, and this is going to do what I think it's going to do, my profit target is going to be down here around $7,500, which would give me about a 5 or 6 to 1 risk reward ratio. And if I'm right, I'll make somewhere around like $8,500, right? Something like that. I didn't do the math. Yeah, like $8,500, right? Close to $9,000, something like that. So that's kind of what I'm looking for, but I need it to pump. If it doesn't pump, then, if it just dumps, I'll miss out. And if it pumps and I go short and it keeps pumping, then I'll get stopped out and I'll take another big loss, which will be a bummer, but the risk reward is there. It's within my risk management strategy. It's not going to be too much in my portfolio if I'm wrong, all that kind of stuff. So that's what I'm looking at on the hourly, okay? So now what I want to do is I want to jump to a different chart. And by the way, actually, I'm going to stay on the hourly for just a second. I want to show you something about this late short stuff. If we go back to all these big dumps, see right here? See, on the hourly, it got oversold, right? And then people were rushing into short positions, like right here. They're trying to rush into short positions. That was right around 79, a little over $7,900, and then it pumped all the way up to a little over 8,000. So that one wasn't too bad, right? You probably wouldn't have got stopped out on that. But it seems to be like there's always this little pump there. Same thing like right here. Let's go back. This one was a really nasty one, right? It dumped. People thought, okay, it's going to go down. Now it's going down to 7,000, 6,000, whatever. And if you went short there, you'd been stomped, right? Because that was around 7,900, and it took a whole day or two and went all the way back up to 8,100. Probably would have been stopped out, right? Same thing right here. If you went short here, thinking it was going down, it likes to pump, right? It always likes to throw that last little stop hunt in there, and you got to be really careful about going short on these false breaks. Like here's another one. It broke all the way down to like 8,200. So if you got crazy and went short there, then it immediately pumped it almost $9,000, you'd have been crushed, right? So, and here's another one, right? Down, you think it's going down. Okay, it's going down. It's finally going down, and boom, pump, right? $800 pump. So just be really careful, guys. Make sure you're trading setups and you're not FOMOing in. If you miss the entry, yes, it sucks to miss an entry, especially if it then, if you miss the entry and then it drops $1,000, it's like, oh my God, I knew I should have done that. But, for the one time you're right and it goes your way, there's going to be 3 or 4 other times where it might not go your way, and over the long run, you'll end up losing a lot of money, okay? So let's take a look at some of the bigger time frames. Now, this is some of the stuff I was talking about in yesterday's video, and again, I apologize that thing didn't get published. I don't know what I was doing. Okay, so this is our 3-day chart, and I talked about this extensively yesterday. So we had the M's, which I've talked about in previous videos. We're inside the bear market RSI. It was completely expected that we were going to get an M. Now, I don't know if we're going to get an M. Let's be very clear about that. This looks like an M right now, like it's trying to be. But guys, this candle's still open. If this thing turns around and heads north, this won't be an M. It'll end up being a W, right? Which is a bullish sign instead. So don't get too overconfident just because it looks like an M right now. But right now it does look like it's trying to form an M, just like here. It looks like it's trying to turn over. Also, one of the things that I pointed out yesterday that I hadn't talked about in previous videos was this, right? If you measure from the top of the move in 2017 to the bottom of this move, basically all it did on this February pump was retrace about 38.2%, came right up to that 38 fib, and then dumped from there. If you do the same thing with our current market, measure from the top of our downtrend to the bottom of our downtrend, it came up. Yes, it did peak above on a wick all the way up to the 50, but it closed underneath the 38.2, so it looks very similar. Okay, don't need to talk about that. We'll make it quick and dirty. That's it, right? That's what I'm seeing on a 3-day chart. If we look at a weekly chart, we have been finding a lot of support on the 12 EMA all throughout this market. It acted as really great support for us, and when we popped above it, it had been acting as support so far. Now today, it actually tested that. It slipped underneath it momentarily. It's 91.73. Price got down just under that. Right now it's sitting around 91.85. So we'll see how that acts. All right. Same deal though on the RSI. We're still in bear market RSI territory, but that could change. They could pump up and break out of that zone, right? So just keep that in mind. But that has been a pretty strong area for the last couple of years. It's either support or it's resistance. Okay. On the daily chart, I'm actually going to pull in another picture in just a second, but essentially what you have right here is you had a 200 daily moving average has been acting as support. Let me turn off the lines, and you can see it just bouncing off of it over and over again. Today we slipped underneath it, again, very momentarily. It's down around 91.68, so it's about 16 bucks under price right now. It has found support so far, so it's very possible that we do find support there and that we do bounce. I'm not expecting much of a bounce. I think the bulls have been exhausted at this point, but we will see how it goes. I think this whole pump, which is what I've been saying all along, was one big manipulative event. I think they timed it perfectly with the China news. I think they probably had some insider trading knowledge, and they timed all this to get this massive pump so that they could re-enter distribution and dump more money on unsuspecting retail investors. And there was actually an article I saw the other day saying that the number of the wealth, right? The Bitcoin wealth, the number of whales has actually grown this year. There's more whales now than ever before. Basically, money is being transferred from the small investors over to the whales, which is what markets do, right? The whales in this market are basically like Wall Street and the regular retail world, okay? With that being said, let's turn these lines back on. We're trading inside of this tight little range between like 9,100 and 9,400. Also this bigger range here. Now here's what I want to show you guys. I want to show you a picture. So let me pull up Twitter. All right, so here's the deal, guys. I hadn't done an updated version of the wick off in quite some time, so I'll go ahead and tell you about this in this video. Essentially, this is what I think is happening. Okay, I do think that, I traded this as wick off this entire range from June until this point here. This is why I expected the retest of 9,500, which we got. It went a little higher than I expected, but I still think this is wick off. Now, I'm going to tell you guys in full transparency, one of the guys that actually owns the Wick Off Institute, he disagrees with me. He does not think this is wick off. He probably knows more about wick off than I do. Okay, but I don't care. As a trader, you have to go with your own, analysis. You can't default to somebody else's judgment. I think he's wrong. That's very bold. It's not arrogant. It's bold, I know. I think he's wrong, okay? I think that if this was the stock market, I would agree with him, but this is crypto. And in crypto, there's a lot more manipulation. So his thing is, he's right about this, by the way, obviously. By textbook definition, this rally should have been a low volume rally. This should not have been high volume. It was extremely high volume. So in his mind, and I think he has some other reasons as well. I don't want to put words in his mouth, but in his mind, this is not distribution. Okay. In my mind, it is. In my mind, this is wick off logic, and this was just a manipulative thing, and we're still heading lower. So there's that. Another thing I want to show you guys from my Twitter. I post a lot of stuff on Twitter. If you're not following me over there, make sure you follow me. This is a 5-minute fractal. People keep talking about the Litecoin fractal. I'm doing it again. I can't say fractal today. But they keep talking about Litecoin being a leading indicator for Bitcoin, but they're not talking about this chart. They keep talking about, they kept talking about the pump, right? Well, I said, okay, well here's Litecoin for you. Pump, descending triangle, pump, descending triangle, right? Pump, pump, stop, pump, stop, pump, stop, pump, stop, pump, pump. All right, descending triangle, dump out of the range, come back up, break the ice, boom, right? Retest here and dump. That's what I think is next. This is a 5-minute Litecoin chart versus a weekly Bitcoin chart. So don't read too much into it, but that's kind of what I think is happening there. Another thing that I posted yesterday that people found interesting, and I found it interesting, was this. I haven't talked about this in videos in probably a month or so. Guys, this is a long-term log chart. This chart goes back to 2015. All right. This green line is drawn from the high back here to the lows of 2018. That's all I did was connected it here and I connected it here, and it just so happens that it was a nice line of resistance here. Other than that, it really didn't touch very much, but that's kind of that line. Okay. This purple line, however, touched a whole lot. I didn't connect it up here. I connected it back here, right, on one of these closes, and I connected it to the lowest close in this area here. So that way I could get it to go as low as possible, because I wanted to be conservative, right? I didn't want to be like, oh, okay, I'm going to be ultra bear and purposely manipulate this to be bearish. No, I wanted to try to be as fair as possible. So I drove from back here to here, and you can see it acted as support all through here. We got away from the line, came down, it acted as resistance, we came up, it acted as support all through this bull run. You see this, right? And then it acted as support when it came back down in the downtrend. And only when we broke through this line did we dump. Now I want you to pay attention, very close attention. What happened when we pumped? We came up and touched that thing damn near perfect. Basically what that's called is a bearish retest. We retested support, flipped resistance, and that's normally a sign we're going lower. How low? Because I think we're going to this green line still. I really, really do. This green line is sitting around 5,300 bucks on this chart. So maybe we don't get to the 4,300 like I've been talking about. I don't know. But I definitely think we're going to go lower from here. Okay, so there's that. Now, the funny thing is a guy started arguing with me about that. Called me some very choice names, which I don't care about. Let me try to find the post because I posted a rebuttal, and it matters, okay? It matters a lot. Here we go. Okay. So he was saying that, I was trying to use a log chart because log charts are more bearish than bullish. So the funny thing is, I said, okay, let me turn off the log chart. This is what that chart looks like if you take it out of log form. If you do a regular chart, that purple line is actually way the hell down here under 2,000 bucks, and the green line is way down here around 3,800 bucks. Okay, so I was actually trying not to be overly bearish. I was trying to give the bulls the benefit of the doubt. But if we look at it non-log form, this is what it looks like. And that purple long-term 5-year trend line is actually down around 2,000 bucks. Okay, so there is that. Let's see if there's anything else on my Twitter that matters. Not really. I think that pretty much covers Twitter. Okay, so that's kind of where I'm at on the daily, the weekly, the 3-day, right? Still very, very bearish. And again, on the shorter time frame, I'm expecting some type of pump. Well, it looks like I'm getting it, so that's awesome. I'd really like to see this thing pump up and retest this line of resistance. Also retest the top of the channel if possible. And what I'll be looking for if I'm going to enter a swing trade, guys, I'll be looking at my 5-minute chart. Okay, the green line doesn't matter here. This is an hourly green line. I'll be looking to see if this thing is up in overbought territory and what it looks like. Okay. So we'll see how that goes. Let's talk about Litecoin real quick. Litecoin has kind of been indicative of a lot of altcoins. It had this really nice pump, like a lot of alts did, while Bitcoin was ranging. That's typically just a heads up if you don't know this already. Alts like to pump when Bitcoin ranges. So if Bitcoin gets stuck going sideways, that's a great time to start looking at altcoins and start trading some alts. But at this point, I think it's too late to chase. Okay, I think this is just too late to chase this thing down. We came up, we tested resistance several times, and now we bounced back down and hit support. We found some support there. Would have been a pretty good place to enter a trade position. You can see it was really, really oversold on the 5-minute. But if I had entered down here, I would have been scalping that thing. I'd literally be taking profits right now, right about 1%. I would not be holding Litecoin. Okay, all of this looked like a dead cat bounce to me. I think alts are going to be interesting over the next couple of weeks. If we look at, we're going to look at OMG as an example here. See, this thing actually put in some really nice bullish structure, or it was trying to. If I look at a 4-hour chart, it looked like it was trying to put in a nice W. But what happened was a W needs to retest the neckline and bounce. It needs to come down and bounce. And it didn't. It fell right through it. So this all looks like one big fake out. And now if we zoom out to the daily chart, instead of having a nice W, all we've got is a giant M trying to form. So if this thing comes down and breaks this neckline right here, it's probably going to go back down to new lows, okay? And if you look at most alt charts, they all look like, not all of them, I shouldn't say all of them, most of them look like that, okay? Here's the XLM chart, which, guys, I don't remember if it was yesterday I talked about this. So if I talked about this in a previous video and I'm regurgitating it, I apologize, but I do want to point out one thing real quick, because it really bugs me when people act like no one could see this pump coming. I had a position on Stellar, right? And the reality is this pump was very, very obvious, okay? People are going to say, no, it wasn't. It only happened because they burned half their supply. That's bullshit. That is complete and utter bullshit. Don't let anybody who's not a trader tell you that you couldn't have saw this coming, because you absolutely could have. I'm going to show you guys something real quick. If you learn this and you apply this to your trading, I promise this will help you so much. Watch what we had down here. We had, boom. All right, see our side down here around 26 on the daily. Then over here it was down around 29, and then over here it was down around 37. So you had it making 2 consecutive higher lows. I'm getting ready to show you what I call a triple divergence. Over here, price made a low. Right here it made a lower low, and right here it made a lower low. So now you've got 2 consecutive lower lows. That's a triple divergence on the daily. Every single time I see that, I'm entering a trade. I don't give a shit what else is going on. If I see a triple divergence on the daily, I'm entering a trade, and I'm going to enter that trade with a tight stop loss. Okay? If I can get other things to back it up, I might make the stop loss a little bit looser, but I'm entering that trade every single time. Okay? That was down around, when this candle closed, that candle closed right at 5.4 cents. Next, what happened? Price started making higher lows. Okay, fine. But at the same time, it was making roughly even highs. Oh my goodness, what is this called, guys? That is an ascending triangle. What happens with an ascending triangle? What do we do with ascending triangles? We measure them from the bottom to the top. That was about 1.38 cents, 1.4 cents, somewhere in that ballpark. If the triangle breaks north, what are we looking for? We're looking for it to break north, the height of the triangle. So let's pull this over here. Let's set it on top of the triangle. And there you have it. Your breakout target was right there. If you didn't enter on the break, it came back down, had a little retest, didn't quite get to the line, but it had a little retest here, basically retested this wick, and off it went. So you could have entered back here on the divergence, triple daily divergence. You could have entered right here on the breakout, probably would have got stopped out. Could have entered here on the breakout, or could have entered here on the retest. Okay? And then you could have taken profits on this pump. This was a freaking massive pump, guys. This thing pumped from the bottom over here of that daily divergence. It pumped about 70 to 75%, roughly. Massive. So if you put in $1,000, if you said, you know what, I'm going to take a little nibble on this thing, I'm going to throw $1,000 on this alt, and you cashed out at the top, you would have made over $700. Now, realistically, you wouldn't have cashed out at the top. You probably wouldn't have bought the exact bottom. But on a $1,000 trade, $400 to $500 profit would have been a conservative number, right? Easily, $400 on a $1,000 trade, which means on a $10,000 trade, could have been $4,000. Now, me personally, on altcoins, I typically don't put more than 5% of my portfolio into an alt trade. All right, so it just depends on how big your portfolio is. But I don't like to put more than 5% into an alt trade. I used to put more than 5% until it crushed me. I put in about 30% in an OMG trade when I was still a new trader, and then OMG dumped, and I lost almost 2 Bitcoin, which was rough. And did the same thing with Litecoin. I put in a ton of money into Litecoin, and then it dumped on me. That was in early 2018, right? Lost a ton of money on that Litecoin trade. So I try to exercise proper risk management, like 5% on an altcoin trade. And then the great thing is, again, that's one of the reasons that I could enter in a position like that, because let's say that I entered a long position over here on this daily divergence, right? And let's say that I think it's going to pump, 30%, right? 30% is normally a good number on a triple divergence like that. So let's say I think it's going to pump 30%. Well, then I can set my stop loss at 15%, have a nice 2-to-1 risk-reward ratio, right? And if I'm wrong, and this thing goes all the way down here, then, if I'm using 5% of my portfolio and I lose 15% of it, here's what that looks like. Let's say that I'm using 5% and I lose 15%, then I still have 4.25% minus 0.05, which means total, I lose less than 1% of my entire portfolio on that trade if I'm wrong, okay? And in this case, once it put in that beautiful ascending triangle, I could have actually canceled my profit order and just watched and moved it up to the breakout. And if I'd done that, it would have been about a 59% trade, okay? And again, I took profits on Stellar right around 8 cents, a little over 8 cents. It was like a fraction over 8 cents. So I'm not talking theory here. That's actually what I did, right? So anyway, that's kind of what Stellar looks like. The altcoins, how am I doing on time here? My recorder has disappeared, so I don't know how I'm doing on time. So I guess I'll go ahead and wrap up there, guys. With all that being said, please remember I am literally some guy sitting in a spare bedroom. I'm not a professional financial advisor. Nothing in this video is financial advice or trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment. If you enjoyed this video, please do me a favor and hit the thumbs up button if you haven't already. Also, don't forget to subscribe to the channel. And now you can check the description for links where you can follow me on Twitter, TradingView, join my free Facebook group, and I've added some affiliate links, which I get compensated for if you use them, to various products that I use in my trading. That way, I can start monetizing this channel. So I'd appreciate it if you use those links. Again, I'm financially compensated if you buy stuff through them, but most of them offer you some type of discount as well. All right, this is James with Crypto Common Sense. Trade safe.